ECB Watch, we like June more than April. The ECB is likely to confirm that it is marching towards a rate cut in June at its meeting next week. The overall tone of the message could still be dovish, as the prerequisites for rate cuts are already rather close to being met. While an April cut is not totally out of the question, we think the ECB will give further signals that it is set on cutting rates at the June meeting. Lagarde is likely to signal open-mindedness on what will happen after June. The very small pricing for an April move makes betting on a surprise cut more attractive. Also, the overall message could be soft enough to support a dovish market reaction. The March monetary policy account illustrated that even if more data are still needed, the case for cutting rates is becoming stronger and cuts are likely to continue also beyond June. Yen rises most in nearly a month as global tensions boost havens. The yen rallied the most in nearly a month, pulling back from levels that traders speculated would spark Japanese intervention, as rising tensions in the Middle East spurred a sell-off in riskier assets. The currency strengthened about 0.3% in New York, the most since March 8 on a closing basis, to 151.22 per dollar. The yen was among the day's top group of 10 performers. It gained along with treasuries and oil, while U.S. stocks tumbled. You are seeing the old safe havens, treasuries, the Swiss franc and more impressively the yen, rallying on the back of rising geopolitical tensions in the Middle East, Paresh Upadhyaya, Director of Fixed Income and Currency Strategy at Amundi, U.S., said in an email. International trade in goods. The seasonally adjusted balance on goods decreased $2,778 million in February. Goods credits, exports, fell $1,041 million, 2.2%, driven by metal ores and minerals. Goods debits, imports, rose $1,736 million, 4.8%, driven by processed industrial supplies. NES The extra leap year day in 2024 is unlikely to impact seasonally adjusted statistics released by the Australian Bureau of Statistics, ABS, for the month of February 2024 and the March quarter 2024. This is because the effect of an additional leap year day is analyzed and accounted for as part of the seasonal adjustment process, which includes the impact of trading days. The impact of the extra leap year day will be evident in the original, non-seasonally adjusted, series. For more information, please refer to this note. Aussie dollar, exploring the bullish seasonal dynamics of the Aussie dollar and Western Australia's harvest cycle. While countries struggle with central bank indecisions on interest rates, the harvest season in Australia is predictable. Australia boasts a robust commodity base, frequently called a commodity currency. Commodities account for a large share of Australia's exports, so movements in commodity prices result in movements in export prices. Exports lead to currency conversions to purchase these commodities, leading to a bullish seasonal pattern for the Aussie dollar as the harvest season begins. Australia's harvest season. The Aussie dollar's seasonal low, which historically occurs in November to December, is relatively consistent due to the upcoming harvest season of the summer crops and the surge in exports to countries such as China and other South Pacific Rim countries. This crop year saw the seasonal low come in late October. More Research Center Incorporated. RBNZ likely to keep rates steady next week despite rising financial instability. Sydney, the Reserve Bank of New Zealand is expected to come quickly to a decision to keep interest rates on hold at its policy meeting on Wednesday, but the central bank is nevertheless set to wrestle with the problems of sticky inflation at a time of increasing financial stress. The consensus heading into the meeting is that the official cash rate will be held at 5.5%, but there could be dovish tweaks to the outlook. The RBNZ has likely passed the peak in the cash rate hiking cycle. However, now it is confronted by a complex policy trade-off balancing sticky domestic inflation against clear signs of broadening financial stress, said Nick Yesnon, economist at UBS. Thank you.